And we should be live for everybody who is joining us. If you're here for the webinar on how to build a control tower for smarter and faster business decisions, you are in the right place. So thank you so much for joining us. Whether it's morning, afternoon, maybe very late in the afternoon for you, depending on where you're joining us from. We'll get started in just a couple of minutes, but we'll let a few of the folks joining us trickle in. I'd love to kick things off with just getting a sense of where everybody's joining from. Personally, I'm right now in Toronto, Canada. What about yourself, Harry and Helina?
I am joining from the southwest of the UK in a city called Exeter. I'm sure anyone outside the UK will not have heard of it.
Is that close-ish to Bristol, Southampton, or no?
Oh, yeah, okay. No, it's literally like an hour. It's kind of in between the both of them, Helina.
Okay, brilliant. I've been to Bristol, but I haven't made it to Exeter yet, so I'll make sure to pop over and see you next time.
That's the next trip down the M5 then for you.
Brilliant. And I'm in Victoria, at the very southern tip of Vancouver Island in BC. But I used to live in the UK, hence why I knew where Exeter might be.
That's lovely. The UK connection. I spent a year there as well in London. Never made it out all the way to Exeter though, but it was a fun time. So you got people from all over responding in the chat. Definitely let us know in the chat. See Liverpool, UK, somebody else from Vancouver, BC as well. Some Canadians, people from the US, of course, Long Island, Hinton, Indianapolis, Philadelphia. They keep trickling in. Amazing. Okay, so we are a few minutes past the hour. I think folks will continue to trickle in, but we will get started with the webinar. And first things first, I want to go over our agenda. Hopefully everybody can see my screen okay. If you're having any problems, just give us a shout in the chat. But this is our agenda for today. So we're going to do quick introductions, and we're going to jump into the panel around building a control tower. And what even is that? What is a control tower? What is this metaphor that we're applying? And it's going to be a conversation about accounts receivable, payable, reporting, and of course the workflows that connect it all. And then we'll do a live Q&A. I do want to give a quick caveat for folks. We received a ton of questions during the sign up and registration, so the webinar may go slightly over. If that's the case and you have to jump early, the session is being recorded, as you see, and so we'll send the recording over to you afterwards so you can review if we didn't get to your question by the time you had to jump. And then also the webinar itself is live, as you can tell with the webinar chat. So be ready to answer questions. We're going to have a couple of polls that will run during the session. The benefit of this being a live session instead of recording is that you get to interact with the guests here. And then finally, we will set most of the Q&A towards the end when it comes to the live questions, but we'll be tackling the questions that you submitted throughout the session. Okay, so moving on to introductions. We have a couple of great panelists for you here today. We're joined by Helina Patience, who is the head of accounting at ApprovalMax and the CEO of Entreflow. She's a CPA and a CMA with over 15 years of finance and HR experience across multinational companies and all types of industries. And we're also joined by Harry Simons, who's the head of customer success at Joiin. He's bringing a very deep understanding of both single and multi-entity reporting challenges that we'll get into today, and is very passionate about helping finance teams streamline their reporting. And I'm your host for today, as always, on the method side. My name's Mattis, and I work with businesses to help improve their accounting workflows, their reporting processes, and their kind of entire end-to-end invoice and estimate quote to cash cycle. And I'll throw it over to you, Helina, in case I missed anything, if you'd like to expand on your kind of background here.
For sure. So just want to share a little bit about ApprovalMax as well. So ApprovalMax is an amazing application. We started using it at Entreflow years ago to help with our clients who really needed support in automating their approval processes. It gets pretty messy and fun out there in the market. So we started implementing ApprovalMax for a lot of our clients, built a relationship with them, and now I'm here to help support them with from a head of accounting position to really help spread the word about ApprovalMax and let people know about it. But it really helps to automate the approval process, digitize it as well, and has an amazing audit trail too. So for anybody who is in a not-for-profit construction audit, has an audit engagement, or just really complex businesses, it's an amazing tool to really help streamline the most complex approval workflows you can think of. So, and then at Entreflow, I work with some high growth companies to really help them achieve their goals. We look at their people, processes, and systems, and ensure that they're running as effectively as possible so they can grow well. So that's how we implement lots of apps like ApprovalMax to make sure that everyone's running efficiently. And we do fractional CFO work with them to help them grow and do all the great things they want to do in the universe. So that's a little bit about me. Thank you.
Thank you, Helina. And we will throw it over to Harry here as well.
Hi, Mattis. Hi, everyone. So I'm Harry from Joiin. Good to see you all. Recognise a few names that are joining, but some are new to me as well, so that's lovely. So for those of you that don't know about Joiin, we are a consolidation tool primarily. That's our kind of main niche. We also manage some single entity reporting as well. Our kind of backstory, like all good software, we come from a place where we had a challenge. We were buying a business off of Bill Gates, not Microsoft, and that one always lands nicely. Yeah, we're buying a business off Bill Gates, and we basically need to get some SAP and Xero data together, bring their financial data into one place to kind of estimate the value of the business and whatnot. We had a particular short time frame. We built the skeleton version of Joiin. We saw it and we went, that's pretty good. We could probably sell this. And here we are, kind of 8 years later, 50,000 organizations later, kind of going strong in that consolidation niche.
Amazing. Thank you, Harry. And for anybody who is new to Method, Method is a CRM tool that is one that comes with a really amazing bidirectional instant sync to both QuickBooks, whether that's desktop or online, and Xero. We've been focusing on automating the sales operations and customer management and having that end-to-end workflow that talks back to your accounting system without having to have your sales team dig into your QuickBooks file, which you probably don't want to have happening anyway. It's a fully customizable solution. We've got a long track record that's over a decade, and a ton of 5-star reviews in the various accounting app stores. So we'll talk a little bit more about that later on, but let's get into the meat of the discussion today. So we're going to be tackling some of the questions that you submitted. This is a quick overview just to give you a taste. We're not going to get to these just in the slide, but so you have a sense. Sydney wanted to know about CFO level reporting and how she can construct these analytics. Emma is dealing with several entities that she wants to consolidate and have forecasting capabilities. So Harry's going to help her out in that regard. We've got questions around monthly reporting, a big workflow question, and again, consolidation around the AP and AR workflows. So we will dive into these in more depth. This is just a quick preview, just so folks get a sense of what we'll be talking about. Before we get into those, we want to talk about this concept of a control tower. And this is really borrowed from the idea of an air traffic control tower, especially as your business grows and scales. Like if you think about you operating a single plane, maybe a propeller plane that you're running as a single company, you don't really need something as massive as a control tower. But as the different functions in your business get more complex, as you add more functions, as they do more things, suddenly this becomes extremely important in your operation. And there are these key components to it. The first one being around accounts receivable, because ultimately, if you don't have accounts receivable, if you're not, in other words, bringing in cash, there isn't really a business. So this is kind of the fundamental first building block of what you have to consider and how you're going to manage this. And some of the questions that we got in this regard were around, were around these areas. So I'm going to read out a couple of these, and then we're gonna jump to a quick poll, and then we'll come back to these questions, and I think we're going to tackle them. Helina, I think we're going to be throwing quite a few of these to you. So, Mike wanted to know, for accounts receivable tracking, the customer interaction activity, emails, phone calls, alongside the invoice and accounts receivable information, a clear and easy way. How do you do that in the best way? What are some of the best practices there? Amy wants to know if there's a better way that we can stay on top of AR and get clients to respond with payments more efficiently without having to constantly remind them. I think it's a huge one. Folks want to know about automating. Again, too much time chasing people. Bernie's calling out AR repeat offenders. I'm seeing some common themes here around getting paid. Again, there's something around rolling up the reporting into 3 different companies. So all very interesting. I'm going to launch this quick poll, and then we'll get a sense of where we're at in the audience, and then we'll go back to the questions. So let me just find the poll section here. Okay, so folks should see now the poll question is, how long does it usually take for your invoices to get paid? We're going to give people a couple of seconds to answer that. Let's say I'll give it about 30 seconds. Everybody should be able to click on the screen here, and then we'll share the results.
I was sad to see that hosts and panelists can't vote on that poll. My answer would have been less than 7 days.
Nice.
Ditto.
Very, very nice. Because you're gonna give it a couple more seconds here. Do a countdown. 5, 4, 3, 2, 1, and then we will end the poll and share the results. So as you can see, a lot of people are kind of in that 31 to 60 day mark, a really good chunk. I understand that that's going to be business dependent. It is nice to see also the 26% or so that are in the 2-week mark. But I know that things can even get better. Sometimes you can get paid everything up front. So we will dive into all of this. And I want to bring up now a kind of first discussion question before we go back to the question set. And it's this conception that people have, or maybe a misconception around payments. And the idea being that payments, they're often delayed because customers are just slow. They have a lot of things going on. There's a lot of back and forth, and there's nothing we can really do here. I think we had some good discussions around this, Helina, as we were kind of gearing up for this session. Is this a common sentiment that you see with your customers?
For sure. I hear this from a lot of people, especially in specific industries as well, like construction, architecture, engineering. Those are pretty bad. I often hear this just is how it is in this industry. You can't change this industry. And that's not the case. Like the accounting industry used to see this a lot, and with the way that a lot of people change their terms and the way that they invoice, thanks to apps like Method, that has definitely changed this idea that we do a bunch of work and we bill people after the fact, and then we chase them for the money and have to defend the work that we've done. That's just we had that at Entreflow at early days because that's what the norm was. And I realized my job was like part collections agent, and that wasn't necessarily something I'd signed up for. So it's certainly something that can change with any business. So we work with a lot of our clients to look at how they are managing their AR and put structures in place to help them improve. And we've had some incredible stories with, taking on a new client who's, books were a mess. The AR hadn't, or they didn't even invoice. I think $3 million worth of invoices hadn't even been sent out yet, that were some of them up to 18 months late, that we were able to, through some really good processes and good conversations, collect all of that within a really short time frame. So I think that people think, oh, it's too late, they're not going to pay it. That's not necessarily true. and that there's, they don't want to badger people. But the way that it typically works with AR is, first of all, you want to avoid it as much as possible. That's the first thing to do. So anything you do to get paid up front, have a really good, easy system for people to pay. So you're not waiting for them to pay invoices, but you're just collecting the money directly automatically from them, helps. And then after that, being a squeaky wheel, because they're going to pay the folks that bug them the most, unfortunately. And so you have to be persistent, and then build that behavior with them so that they know that you're going to demand your payment quickly, and that'll change the behavior. So I've worked with many companies to fix their AR. I think there's usually a lot of excuses at the business owner level, but ultimately what usually helps them to understand how bad the problem is. And when you think of it from a different perspective, if your customers are not paying you, they're basically treating you like a bank. They're stealing credit from you, and they're then able to go do what they need to do with their own cash flow and delay your payment. And you're not getting any benefit for this. And it's also, if you had that cash in your bank account, that would be benefiting your business in a big way. And when you look at it from that perspective, and not just that this is normal, we just need to deal with it, but this is actually my money, and this person is technically just borrowing it from me temporarily. I think that gets people fired up enough to go and start making changes. And when you're going through change, oftentimes the easiest way to change things is to do it with your next new clients, and then slowly chip away at your existing clients. Because a lot of pushback just comes from people thinking, oh, we're going to have to change everything for everybody, and I'm going to lose clients through the process. It doesn't have to be this big monumental shift right away. So I had a lot of thoughts on that one, actually. Sorry, Matthias. Hopefully that's
No, this is great. This is great. I do have a couple of follow-up questions.
Yeah.
First one being around the one example that came up around collecting overdue invoices. It was obviously quite a few, collecting these large sums that we're talking about. Were there any learnings from that process that you found that maybe people want to take away and apply to their own situation?
Sure. I mean, in that case, we were the new accounting team. And so we were just honest with people and said, hey, look, we just came on board. We've just been looking through all the time sheets and realized that a whole bunch of the invoices didn't ever reach you. So I'm really sorry to do this to you, but we've got to invoice you now. And like, if you need a payment plan to sort this out, because this is probably a bit of a shock for you and your cash flow, let us know what we can do, And so we just took a really friendly approach, and sorry, but matter of fact, we got to invoice you. Do you know what I mean? And it wasn't like, is it okay if we invoice you? Because then they're going to be like, no, it's not okay.
Right.
So, so just taking that approach, that being empathetic to them too, because it wasn't nice for them in that case. But that's extreme AR issues. But when it comes to just your existing customers, I think even just saying to them, hey, this has been going on for a while. It's impacting my business. Can we get on top of this? And what can I do to help you with this? If you need a payment plan, or giving them some other options to get caught up, and then set the rules going forward. A little bit of empathy and understanding can go a long way.
Yeah. Marianne says it's very Canadian.
Very Canadian. Sorry.
Nice but firm. The invoices have to get paid. This isn't really an option. You're still owing.
It is strategic, because if you send it off to a collections agency, they're going to take a portion of it, right? So this is an easier way to get the full 100%.
Yeah, true. Very, very true. I'd be super curious if people would be open to sharing, especially those who are maybe on the higher end of the collection timeline that answered maybe 60 days or so, or even less. What are some of the bottlenecks, and are we feeling a bottleneck? Because obviously with this session in this webinar, it feels like that's what we heard from people. If I just pull up the questions again, give me a second here. What are the better ways to staying on top of AR and getting clients to respond with payments more efficiently, without having to constantly remind them? Is this a process question? Is this a technology question? How would you think about this, Helina?
I think it's both. I think if you're sending an invoice to a customer, you've now given them work to do. They now need a team to process that invoice and deal with their payments. And I find most AP teams very inefficient. And so if you put a system in place that will automatically charge them at a certain point in time, if it's going to be a variable invoice, if you can send them the invoice a couple days beforehand so they have a chance to, ask questions, or if it's a fixed amount, just charge them that amount on a specific day of the month, you've just saved them time. They've already agreed to the contract or the, what the work. So they're okay with the amount. So just take their money. I mean, it makes their lives easier. It makes your lives easier. Then you don't have to chase people, because people don't like being followed up for cash as well. That doesn't feel good. So it might just make it easy for them.
Yeah. Uh, yeah, it's interesting, Miriam mentioning that they get paid by check. I do still hear this quite a bit, actually,
Yeah,
that people getting paid by check. Have you seen any successful strategies for getting that,
for sure.
getting
We
people
just
off of the
say
check payments?
we don't let our clients accept checks.
Okay.
Check
Yeah,
fraud is unreal right now. Check fraud is worse now than it's ever been.
yeah.
And we've seen like all manners of crazy things happening with checks, with taking on new clients. So, and I've worked with some very difficult businesses, like old school retail shops where, the client was paying by checks, everyone was expecting checks, and other companies where everything was coming by check. The people use the check strategy to delay the cash flow as well. So sometimes that's the hard thing to get people to change. So if you just give them longer terms in place of the check, or you give them a little bit more time to pay if you're taking it automatically, that can often ease the process. But in Canada, we've had so many postal strikes lately that it's even easier to get people off of them, because like, we had mail show up 3 or 4 months late during the last postal strike. But yeah, just using really good systems that'll take the cash automatically from people eliminates that need for checks. And you can just say, especially this is easier to roll out with newer companies, we don't take checks. Sorry. So these are the other options that we have. We can get you set up on automatic payments, and you don't need to worry about it. And 8 times out of 10, most people are like, "Oh, that's awesome. Please sign me up." Yeah.
Yeah, yeah. I think that would be a very useful thing to implement with new customers.
Yeah.
And I understand that there may be resistance from some industries. I see Marianne again mentioning farmers.
Farmers,
Uh,
yeah.
but I feel like if you start off the conversation with, look, this is just something that we don't do, you may get some pushback and you may not win every conversation.
Yeah.
But if your stance from the get-go is we just don't take checks, I think that's a good approach. Uh, Harry, I do want to turn to you here. I know that we're going to talk about Joiin in a little bit more depth soon, but this question around rolling up reporting, P&L budget, AP and AR. Do you find it that people come to Joiin because of AR reporting problems, or is it more of like a consolidated overall view? How does it kind of?
Yeah, it's an interesting one, I guess, isn't it? Because I guess yes, the answer in short, people do come to us for that particular use case. And I guess it's around being able to see kind of like your group accounts receivable or accounts payable performance. So rather than say you're going into your individual QBO file previously to look at what's owed or what's due, if you rinse and repeat that over a multinational 50 entity business, that's unwieldy. That's not efficient, is it? But if you've got it in any consolidation tool, anything that brings it together, obviously I'm going to say Joiin, but other tools are available. That gives you that kind of like centralized one-stop shop to see the kind of the group's performance, and just streamlines it, allows you to put that control tower in place, doesn't it? Check any anomalies quickly, act on them quickly. Just simply a much more efficient way of doing that, than the manual previous roles of yonder year.
Appreciate it. Yeah. Okay. I think we're going to keep moving, and I do want to have time to talk about the like AP and reporting piece as well. And we're going to do a very, very quick demo of method just to give people a taste of what you can do with platforms. And I think this does come with a process change as well. And I think the biggest piece here is when you have multiple instances and entities that you're having to manage. So we'll just give a quick overview of what it's like to. So this is the method platform in case people aren't familiar with it, and what it's like to create an estimate. And the thing to keep in mind here is, think of you running an operation where it's not just your accountant or your finance department that's taking care of all of this, but you are actually customizing what you're allowing people to do, and you're enabling other team members to take care of some of this while still having everything reconciling back to QuickBooks. So if I go in here and I want to create a new estimate, I already have a list of customers here. So why don't we pick Anderson Consulting? and maybe I am just billing them for some service hours. I'm sending an estimate here. I think actually I want to select a different inventory. Here we go. So service hours item here, let's say it's 15 service hours. I can check this off if I don't want this to be synced to QuickBooks yet. But let's say I just do want it to be synced with QuickBooks. I have my estimate list here. What I can do is I can just simply save this. I can send it over to him through email or SMS if they're old school. Sometimes in some industries that the SMS estimate is actually really useful. I've got a whole bunch of more actions that I can do. I can print this off and send it as a PDF if that's what they prefer. I can also demand a deposit. So this is a really, really good one that you can build into the workflow, and you can actually make this a requirement for your team who's sending estimates. I'm not going to do this now just to not have to deal with additional kind of demo elements, but I'm going to save this and imagine that I sent this off to the person. You will also see here as I refresh, you should see that estimate come up in my QuickBooks account. So here I have it, Anderson Consulting. So the accountants already know that this is out, even though maybe it was just a salesperson that touched this estimate. And then the customer themselves, there's multiple ways that they can pay for this. But one way that I would want to demonstrate is there's an automatic portal that everybody gets in Method. So all of your clients automatically have a portal that they can go in and they can manage. I think somebody was actually mentioning this in the chat. So if I go and test drive and I find Anderson Consulting here, I'm now impersonating this customer and kind of what they would see. They can go into this portal and they can see their list of estimates and the things that are outstanding. So if I find this estimate, 2175, I have it here and I can accept it directly through the portal. Add my signature in here and move on. I could also collect payment directly through this portal. And again, once this has been accepted, if I go back into my QuickBooks and refresh this, I see that it has been accepted. And so every single kind of item inside of Method and QuickBooks is immediately synced and it is fully integrated so that you have this parceled out. Again, as I'm doing this as a single kind of instance of sending out an estimate, it might seem very simple, but where it gets really, really powerful is when you're talking about managing large teams or maybe managing multiple entities. And let's say you have, 5 locations, or in some cases, people have up to 50, different franchise locations, and they want every location to follow the same sales process so that they can consolidate their reports into this, standardized view. So what you can do with Method is you can actually enforce certain items and you can enforce certain processes and workflows for everybody. That way you're actually creating this kind of impact overall across the entire organization. So I'll stop here. This is just a little bit of a taste, and then we'll get back to the webinar and we'll move on to our AP conversation. So let me just reshare here. Okay, so that's AR. Let's talk about AP. And these are some of the questions that we received. Duplication, that's a big one. It's a big one for sure. Processing, authorizing, and paying in batch with a single app in South Africa. I'm not that familiar with that region, not gonna lie. Multi-page invoices and credit invoices. Supplier sending me invoices in bulk, selecting page capture, but then when it's 2-page, okay, so this is like a formatting issue, it sounds like. Complex staff structure in relation to who should be approving what invoice. I think something like ApprovalMax can probably help out there quite a bit. Closing when suppliers are slow to submit invoices. Human requests from personnel in different locations. Solid cash flow forecast model is needed for that. All really, really pertinent issues. I think everybody's very familiar with dealing with this type of stuff. And the way that we would summarize some of the responses that we see from people, or the misconception here is that manual approvals are just safer than automating a lot of times. Like we almost don't want to touch the broken system because even though it's so painful, at least we feel like, okay, I've got a human watching things here. It's, it's not going to go haywire, and then somebody's always going to have eyes on it. Helina, do these types of issues sound familiar to you when you're talking to clients? I feel like this is common
100%.
conversation.
Although I haven't had to look for a payment application in South Africa before, but I'm sure there is one. One of the ones that we use quite regularly for AP is Pluto. And there's a number of different applications out there, and I think there's some development with approval maxes in that space as well. You can send payments and receive payments from South Africa with Pluto, but it doesn't connect to the QuickBooks Online South Africa. So you want to find an application, a payment application that'll connect to your accounting software, so it'll pull those bills directly in and then reconcile them back. So that I haven't seen before, but yeah, the rest of it is all very common challenges, especially the duplication. And in that space too, there's a lot of applications that do manage your documents and do OCR, so they're reading your bills and receipts and entering the data for you. A lot of them have duplication features in there. So at this point in time, we shouldn't be taking a piece of paper and manually entering it into our accounting software. ApprovalMax actually rolled out a year ago their receipt capture features as well. And before that, we were using, say, Dext and then pushing the document straight into ApprovalMax. So if you're using a software that is managing those documents, it should have some level of duplication triggers in it. So, yeah.
I can speak on like a micro example to some bad processes in accounts payable. So I used to work in an accounts payable department of a well-known optical retailer in the UK. I won't say who they are.
Yeah.
And our AP process was we'd get a post bag come in that I would take out of the post box. It would be sopping wet, covered in gunk and horrible. I'd pull out either one invoice or I could pull out 500 invoices, and then I'd have to kind of manually code them, get them approved, approve them wrong, put them to the wrong store of the 500. So I personally and our whole team was double counting invoices, missing invoices, delaying invoices to a particular window cleaner that I remember. And he was sending invoices, it was taking the time to come in the post, and he wasn't getting paid for 2-3 months. When if your window cleaner at home came and cleaned your windows, you'd pay them the next day, wouldn't you?
Yeah.
So particularly when you get to like a size of organization as that was, that's just kind of not acceptable. And like particularly with some of the suppliers who might have more strain on their cash flow, that kind of has to change, doesn't it?
That would put anyone off of being an accountant, hey?
Yes. Yeah. It's funny how I never went to accounting after my internship. There we go.
I was gonna say, was that the pivotal moment for you?
Yeah. It was a left field change and I left.
That's incredible.
Yeah, it's really interesting to hear that from the AP side. I know that even from the like, if you're not dealing with other businesses and you're just serving and customers, like I've had instances this year where somebody came in to do some contracting work, and then we don't get an invoice until like 3 or 4 months down the line. And some of the members in my household are quite upset about that. And it's like it's almost because there's a relationship piece to it. Even though we're the ones paying for something, you do want that to happen as fast as possible, and you want that to have that exchange as fast as possible because it's fresh on your mind. Otherwise, you have to be searching through like emails and records and trying to understand what happened where. I think speed is of the essence here for sure. So in terms of the actual change of process. Is this also something that people are familiar? I know there's a ton of check fraud in here. I think there's also like a fear of fraud when it comes to, or even just mistakes, not necessarily fraud, because once the money's out, if you double send something, it's a pain in the butt to try to claw all that back.
It's an embarrassing conversation.
Yeah.
But yeah, manual approvals. Yeah. I think that what in an environment like where you were, Harry, like the approval process for AP would have been pretty important and was probably not as clean and easy as it should have been. Even just the filing processes, if the same bill was getting entered more than once, either it was, a reminder or people often input you'll get like a list of outstanding invoices memo, and they'll enter them again even though they've already entered the invoices the first time. So it can get really messy, but I hear this a lot from people that manual approvals are safer, and there's still a lot of people that are like still thinking paper based, and so they think if if I've signed it, I've looked at it effectively, I've checked it properly, I can look at all the paperwork at the same time, pass it on to the next person. But in actual fact, what I've seen in the past, especially with like larger construction companies that can have quite large stacks of these approvals, is that folks are not necessarily at their desk ready to approve a stack of bills all the time. So they'll come and do a mass approval process, and they'll just flow through them as super quickly, as quick as possible, signing them, blah blah blah, and carrying on. So they're not actually spending the amount of time that you'd expect them to actually investigate. But in fact, when you're using an automated system, now people are the approvals are trickling in, and so they can kind of tackle a smaller amount on a regular basis and actually spend the time. You still have all the visuals there. You can open up the documents. You can look into the backup information. People can add memos and all that sort of business. It makes it safer because you've got that audit trail. There's no chance of somebody leaving a stack of documents somewhere on someone else's desk and then they go missing. So we do get a lot of pushback from people saying, hey, we feel it's safer. And I haven't seen that it's safer. And the other thing too is it's safer on your cash flow to automate it. Just like you were saying, Matas, like you don't want a big surprise of a massive bill like 3 months from now, right? So if you're doing this in real time, it's easier for people to predict the cash flow. I had a situation with a client recently where a member of the team had received a bill for like $70,000 and we didn't even know that this was a thing that was coming up that we were going to have to pay. And they didn't give it to us right away, and they gave it to us like the day before it was due. And we're like, oh, okay, a 70,000 surprise, no big deal. So if we at least got that sooner, then we would have had some more time to plan things out. So, just having that real-time flow helps the rest of the organization deal with, the operations and the cash flow. The other thing that comes up too with bills is, we might have some issues. So say we had a window cleaner and maybe they weren't actually showing up as often as they were supposed to. But the longer it takes for us to get those bills and deal with that invoice, maybe the more we forget when they were actually there or not there to validate if it's legit or not. Or maybe we had a vendor who was we thought the hourly rate was this, and then we finally got their invoice and realized, oh, they're like 3 times more expensive than we expected. We would have changed the process or the work with load with them at some point in time. So you're able to deal with the operational pieces and help preserve the cash of the company if you're doing this real time.
Yeah, and I feel like the common theme that I'm hearing here again is when you're starting to deal with larger sums, we're starting to deal with more invoices. I mean, Harry, given we're talking about a couple to hundreds of invoices, right? Like it's at that point that you really just start introducing this concept and thinking, what do you want to think of it as, a control tower, some sort of centralized control room, whatever it is. You do have to start thinking about what are processes and what are the dials that I can pull, and how do I kind of view everything from a bird's eye view. I'm going to throw it over to you here just to give people a taste of kind of what ApprovalMax can do for the AP side if they want to implement it.
Thank you. The other pushback I hear from people is that they think their approval processes are too complex to be systematized as well. So I wanted to show you a little bit about what ApprovalMax can do, so you can see the level of complexity here. So it's just a recording demo here, but essentially you have individuals that will be uploading those bills in various different ways. And they will be reviewing them to make sure that they're correct and accurate before they go off to the right people. And then you can have a whole different matrices of approvals depending on what that item is. So here you can see we can have them set up by person. So once something is created, then it'll go to the first level of approvals that could be based on location here. So you might have, if this is related to our Amsterdam office versus our Edinburgh office, then we'll go to these individuals. And the person who's actually entering the data can stipulate that information. Okay, it could be based on the roles. So for here you can see, okay, if it's over 5,000 euro, then it's going to go to this person. If it's under 5,000 euro, to go to this person. So you can have your rules set up on a dollar basis. It could be on a classes basis if they're in these different regions. Then or these classes within the books. If that's for QuickBooks or categories in Xero, then you can stipulate that. So it can do projects as well. So if you're working on specific projects, it can say, okay, if it's related to this project, it needs to go to this. You can have it either as an all or if this then that kind of level of complexity. You can have an auto approval step if it's something like, I don't know, a software expense that's pretty common, you just need to get that through right away, then that's fine. Or if it's, here's a mobile plan. Okay, so if it's under $300, then just auto approve it. If it's like 5,000, maybe we need to investigate what the heck happened while somebody was traveling. You can also have a review step too. So if you say have a manager of the AP team that needs to look at things before it goes out for approval for whatever reason, again, then you can set those limits in there too. And what happens is every time this gets pushed from one person to the next, they'll get the notifications, they can click a link, they can go in and review it and approve it. And when they're reviewing it, they're seeing all the backup documentation, and they're also seeing the audit history of who's done what since then. So they can see this person's approved at this time. Here's all the backup documentation and information here. So I think it's just showing you a specific, so for the approver, they would see this is what they would see from their end, and they can go and approve it. Just going to look at another bill here, and then they can see once you've approved it. This is the view here, and then I think they're going to show you here the audit report, if I'm not mistaken. But what's nice too is that the whole audit history and the document, as you can see here, will go straight into your QuickBooks or Xero file as well. So at the transaction level in the accounting software, now we've got a double redundancy. We have that backup documentation and the full audit log of what we've done. And we have a lot of clients who have audits, external audits done, and they absolutely love this. We can just give them access to the books, and they can see all the approvals that they need to. If they want to go into ApprovalMax, they can go into ApprovalMax as well, to go check out our rules, and we can export that for them as well, so they can see what the rules are, especially for not-for-profits where we might have bylaws that say that we have to do certain things with certain types of transactions. Then they can see that we've actually set that up correctly in the software. So it's very easy to use. I've been able to set up and we can probably stop the recording here, but set up those approval matrices in 20 minutes or so, review it with the client, and then train them up on the software. And they've all been, like, all of our clients have been super happy with this process, because this versus paperwork floating around the building is a big win for everyone. So it's a little bit about ApprovalMax.
And it also, if folks are managing multiple entities, which I think we do have people with multiple locations, or maybe somebody running a franchise who are looking for answers on the webinars, that's also supported in ApprovalMax as well.
Yeah.
Amazing. Okay, so we are gonna keep rolling. We're gonna switch to reporting. Again, we have about 17 minutes left until the top of the hour, but as I mentioned at the beginning, I have quite a few questions to get through, so we'll go a little bit over. If anybody's really eager to see something or hear something, I would encourage you to use the Q&A box, and we'll try to get to all of that as soon as possible. So the questions from reporting that we received, questions around how quickly can I get monthly reports for AR, AP, payroll expenses from QuickBooks and then roll into cumulative reports for KPIs. So speed of reporting, really, really crucial. I think we had quite a bit of discussion around this, Helina, as we were preparing for this webinar. Like, what do we mean by reporting? We're talking about reconciled bank statements, we're talking about just kind of high level overview. Sydney here wants to figure out how to do CFO level reporting for QuickBooks. Don is talking about too many steps to go from PDF invoice to reporting. A lot of margin for error. I think we kind of addressed some of that in the APR piece. Stephanie here currently is dealing with 32 entities with their own QuickBooks that need to be rolled up for financial purposes. That is quite the process. Folks want to pull any selection of data, trying to get most valuable information, a dashboard to include in my reports. A lot of exporting happening to Excel, copying and pasting. Honestly, I'm even not an accountant, but I'm very familiar with this, just even from like a metrics perspective. So Harry, I'm going to throw this over to you as we run this poll, so people can answer the poll while you kind of give us a sense of those questions. Those hit pretty hard in terms of what you're seeing at Joiin.
Yeah, yeah, no, absolutely. So I guess the common one, as with everything, is around time, isn't it? It's a bit of, it's almost sometimes it's almost sneered about, but actually, like time is still the most important thing. We have a certain amount of working hours per day. We want to kind of get as much as we want done. And also that becomes kind of like really hard when you have your, as Stephanie had, first two entities, kind of managing any kind of reporting. That's really time consuming. Downloading to Excel, bringing it all together into one place. Oh, someone's just added a new journal in QBO file 5. I've now got to go and grab that one, which then means actually it's so time consuming that you kind of, you don't do, if we talk about consolidation, right? You don't do your consolidation daily, weekly, or even monthly. It's kind of like actually like, oh no, I can't. I'll do it quarterly. You've waited 3 months. You could have pulled this lever if you'd have known about this particular KPI metric on day 1, day 10, or whatever your kind of bookkeeping process might allow. Which is what we see kind of time and time again. People coming to us at kind of at the end of their tether, which is kind of exemplified by a lot of these questions. And I know there's kind of hundreds more questions that we didn't put on the screen as well. And primarily it's around time, time fatigue with actually just doing it and kind of being at the wit's end and not having that control tower where you don't feel comfortable making decisions on the data that you have for various reasons, which I think we're going to talk more on in a minute.
Yeah, and we have the poll. I'm going to close the poll now. Thank you everybody for responding. So sharing the results here. Really interesting to see actually a few people saying instantly we can pull the reports. I think I'd love to know what kind of reports you're pulling. If you're comfortable sharing that in the chat, like what do you pull instantly at the end of the month? And then we see people within a month. Not a ton of answers on the many months. From personal experience, just different companies that I've worked at, different businesses that I've worked at, it's actually feel quite common. Some folks don't get around to reporting until like a quarter is over. And again, it depends on what we mean. And Helina, I think that was a conversation that we had. Like, are we just talking about looking at a high level, numbers picture, or are we talking about actually kind of consolidated monthly financial statements? And do you see with clients if there's a preference for one or the other? Like, are people just trying to get a sense of what's going on, or do they want to get everything reconciled and ready to go on a monthly basis? What's kind of the important pieces for reporting for folks?
I feel like at the end of the day, we need to have confidence that the numbers are correct, and we need it as real time as possible. So yeah, consolidating reports manually is a head wreck, especially 35 entities. That would give me a severe amount of stress. But I mean, we're in 2025 now, and yes, we have amazing accounting software at our disposal. We use QuickBooks and Xero, but you do need to have an external reporting tool this day and age, especially when it comes to consolidation and forecasting and things like that. It's kind of a no-brainer when you look at the opportunity costs of trying to roll out reporting. And like Harry was saying, there's a small change here or there, and then having to go back and change that again. It doesn't make sense, especially if you're trying to do a 3-way reporting. Like it's messy. So I think it's kind of a no-brainer nowadays. The cost of these reporting apps is very, very, cost effective given the amount of labor time wasted doing it manually. It's kind of a no-brainer. I don't know, Harry, do you want to speak a little bit more to some of what you see with your customers and the time savings that they have from your app?
Yeah, yeah. So I was just kind of racking my brains. We kind of went there like around kind of examples. So first one that sprang to mind was someone called David, who actually I did see signed up for the webinar. So David, if you're here, lovely to see you. I didn't look through the whole list, but he kind of offers fractional CFO services to business, like scaling businesses that have kind of scaled too quickly for what they were expecting and are suddenly going for like IPO or sale or something along those lines. And it's around, they get to the point where kind of they're piled up, their reporting's kind of gone ahead of them, they've got too much data, too many entities, and they've kind of grown beyond their means too quickly. And he implemented Joiin, and basically it gave them that kind of control again, that you're able to report instantly. You look at your kind of KPI metrics, you look at the amount of cash in your bank across the group as something as simple as that, and actually being like, oh, excuse my French or something. We don't have the money to pay our bills that are due next week across the group, or why has this entity been paying this much? Like really interesting that bringing this time can lend to having that control tower, making better business processes. And David's one example. I didn't quote David's surname because we haven't got authorization from his clients yet to use that, but that case study is coming soon anyway.
Amazing. I think this was one of the kind of common misconceptions that we were discussing leading up to this, is this idea that, hey, you know, if you want accurate financial reports, it's just always going to take days, it's just part of the process, you know, deal with it. And actually, I see in the chat Samuel mentioning that he's getting consolidated P&L, full statements from Joy. They drop them into a template for board deck and report, and they get reporting, and it's instant. So there you go, misconception broken. You can actually get it done instantly. And I think we could discuss this a little bit more, but I just want to be conscious of time in case folks need to jump right at the hour. So I'm going to throw it over to you, Harry, just so people can get a taste of kind of what it's like to do some of this with Joiin. So I'm going to stop sharing, and you should be able to share your screen.
Yeah, absolutely. Okay, so I'm going to try and fire through this one, and let's try and get it beneath 2 minutes. That'd be excellent. Okay, so what I'm going to do, I'm going to go from kind of simple use case. I'm going to build a kind of simple consolidation that previously would be download to Excel, combine them, do the FX, do the eliminations. I'm going to do it in kind of a couple of seconds, and it can be this quick. Obviously, there's complexity to it and setup, but it's kind of that's what technology can do for you, right? So, okay, on the screen in front of you, I've got a P&L for my one QBO company. I want to build this up into a kind of a group consolidation. So I can go into Joiin, I can select from my list of companies. I'm just going to do kind of like a sub consolidation here. My two entities, say they're from the same jurisdiction or something, and I'm going to include these two companies in the report. They're both US dollar companies, but say I've borrowed some money from a bank in the UK. Normally it'd be the other way around, but let's, for the purpose of this demo, say I've borrowed some money from a UK bank and I need to report my P&L in Great British pounds to them. I can go and change to report in Great British pounds. Joiin will do all of the heavy lifting for me in the back end, perform the currency translations, the adjustments, and now I've got my data into British pounds. I can then break this report down however I want. So at the moment, I'm looking at a kind of consolidation for just August 25. I could go, I want to look at this by company. So this is going to give me a breakdown, company A, company B, consolidated total. I'm happy with that. That's great. But actually, I've got some intercompany transactions within the group, kind of an important part of the consolidation process, and probably the one where people have the most pitfalls. Joiin will kind of manage all of that for you. So in the back end, I've tagged my accounts for elimination, and I can go in here and I can say, I could remove my eliminations, or actually I want to have that control tower view again. Let's go back to the kind of topic of conversation. And I want to see my total before eliminations. I'll see all of my intercompany transactions displayed on my P&L just to make sure that actually I've tagged the right ones, they match up, there's no FX differences, and I've then got that view here. So I could kind of summarize this one, and I could say, look, I've got my pre-eliminations for my two entities here, my total of my intercompany eliminations, they balance off against each other, I'm happy, and this is my P&L performance for my two companies in the month of August, like that. That process there, even if you had all your bookkeeping done and everything previously, could take ages, downloading to Excel, doing your VLOOKUPs, making sure everything matches, doing your FX, really difficult. That's kind of data for data's sake here. We've also got kind of like lots of lovely looking dashboards, reporting packs that are really pretty, presentable. You can share with your team, colleagues, the bank, whoever. So I'll just finish there with an example dashboard that, again, you come in the morning and you can have a look how much you've got cash in the bank across the group, or you can kind of look at any other kind of key metrics. And there we go. That's just simple example. I could have gone into AP or AR at the group level as well. But that's just an example. And that works across Xero, QBO, Puzzle for those of you in the US, Sage, Penny Lane as well.
Amazing. Thank you, Harry. And so we're going to keep moving because we've got 5 minutes, at least on our kind of anticipated initial timeline. And I did see somebody put in a comment around reporting and pulling kind of QBO, P&L. and stuff like that directly from Method. Just for context, you can configure certain things in Method. I would say it's definitely kind of, if you're looking at this chart of the control tower, the receivable, the payable, the reporting, it's more around the standardization of processes and making sure that the data that's coming in and out, especially at the customer facing level, is really, really clear. When we're talking about P&L reports and that type of stuff, I would look closer towards QBO itself, and then I would look to something like a Joiin to help you consolidate all of that. So we got our kind of receivables piece built. We have our payables piece built. There's reporting that we have figured out. And then we kind of need to think about the workflows that are connecting all of this together. In the interest of time, I'm not going to do this right now. I'll come back to it. But I want to kind of think through this in terms of, okay, we saw a lot of stuff in this webinar, but a lot of people might say, okay, that looks great. I don't have time to completely rebuild everything that I'm doing now. Yeah, it sucks to do things on paper. Sometimes I miss things. But wow, if I want to have a system that looks as good as what Harry just showed me in terms of, a few clicks and here are my reports, I feel like that's going to take me forever to do. And I think what we want to do is we want to challenge that misconception on this webinar as well. And this comes down to what we spoke about in the lead up, Helina, around what it means for you to be as part of kind of this monolith versus an ecosystem. And we built a little kind of representation here of what we think about that. Do you have input on this? I feel like this came out kind of from your experience.
Yeah, for sure. So like we started Entreflow in 2015, so that was really early days from the cloud accounting space, but invested a lot of time and effort in this space because we could see that there's going to be the way things are going to go in the world going forward, and it's a much nicer environment to work within. So you've got your accounting software as like your core software, and then you can plug in these other applications that are really feature rich and can do quite a lot. Like when you think about both what all these three apps can actually do is quite a lot of workflow coverage and saves people a lot of time, but they don't take forever to set up. This isn't like a 6-month project, completely throwing the team aside. These are apps that can get set up in a day at most, maybe a little bit longer, maybe a little bit less, right? So they're quite easy. And as your company changes and grows, maybe if you got need an inventory app or another kind of application to help manage your business, you can plug and play those apps really easily. So it helps you to grow nicely without having to have a big overhaul of your systems. I worked in industry for years where we were using massive ERPs. That's more of a monolithic, one and done kind of IT philosophy that's antiquated. And they never did what we needed them to do. We were just constantly navigating around the system to get what we needed done. And I was working as a financial analyst at Lululemon, where we were basically uploading Excel documents into a system to consolidate it. And it was $1 million forecasting system that has a fraction of the feature set as the apps that we use on a regular basis now, that we pay $30 a month for. So in this ecosystem environment, we get a lot of pushback from people saying, "Oh, well, we're too big for those accounting softwares," and we have really, really complex companies running through those accounting suites, but we use those third-party applications to be able to get them much better workflows. So I think it doesn't have to be such a big change when you're thinking of it of something that might change gradually over time with different applications, as opposed to overhauling the entire system if you went from one monolithic system to another.
Yeah. Perfect. And I love this idea of like swapping things in and out and seeing what fits you best and what you need, which is why we have this meeting of the three apps here. That if you have a big need in the AP piece, or the reporting or the AR, here's something you can just kind of plug and play. And I think we spent some time thinking through how actually quickly can you set some of this up. And noted down some of the data and some of the things that we see from our customers. So I'm not going to belabor this, but like in the case of Method, as an example, sure, if you're building out some really robust customization and you're completely overhauling how your team is servicing customers, it's going to take some time to design that and document it and actually implement it. But if it's just a case of, hey, I need a CRM and I need something that's going to sync, my estimates, invoices, and allow sales to do what they need to do and get accounting, have them what they need to do. And maybe I need to standardize this across multiple entities. You can sign up and you can sync to your accounting system and see whether it's going to work for you in a matter of minutes. And I think it's very, very similar story with every app that's on this webinar. So ApprovalMax, I mean, I think that's also, it's a very, very quick setup to see if it's working for you.
Yeah, for sure.
Yeah. Okay, and so we're gonna jump into the Q&A. I know we're at time. If folks need to jump, please do jump. But if you have questions, type them into that Q&A box, and we'll try to tackle anything that is remaining. And we'll jump to this best question. We did promise a gift card to whoever submits the best question, so we're going to tackle this one right at the end. But I just want to give a quick shout out to anybody who has to leave. Of all of the companies here, thank you very much for joining us, Helina and Harry. If folks want to learn more about the companies, you can visit ApprovalMax.com. Entreful.com if you need consulting around accounting, CFO services, or HR, and of course Joiin for a free trial if you're looking for reporting. A quick shout out on the method side: if you want to see more of the application, you want to dive really deeply into it, join our trial workshop. Michelle will share a link to that in the chat, and then you can get some discounting right now. So we're running a summer promotion. That said, if you're jumping, please do jump, and hope you have a lovely rest of the day. In the meantime, we're gonna switch over to the best question that we got. So this is from Frankie, and the reason why I think we chose this is because it really touches the entire piece and story of the narrative of the webinar, I should say. And it's this question is: the biggest challenge is aligning budget to expenditure, which falls under reporting and workflows. Without accurate reporting, leaders can't see how actual spend compares to budget, and without effective workflows, unapproved or unbudgeted costs slip through. Getting this alignment right ensures AP is controlled and cash flow is protected. I mean, this sounds like the holy grail to me, Helina. Is this kind of what companies ultimately come to you for? Like, this is what we want?
For sure. I mean, and I'd say too, it's not just budgeting, but also forecasting. With a lot of high growth companies, a budget's like not worth the paper it's on pretty quick, depending on what's happening in the business and how things are changing. For more established or like consistent companies, then for sure you need to have you need to look at that budget on a regular basis. I think a lot of companies like to look at things quarterly. We are always looking at things monthly. I think a quarter is to just look at what's been happening in the market lately. I think we're a bit beyond the quarter at the moment. But being able for the right people to see how we're tracking in that budget to actuals, or how we're tracking from a forecasting perspective real time and at least monthly, is necessary for people to make good data informed decision making on a regular basis. We don't want to be looking back all the time, so we need to have that data there as quickly as possible to help guide the decision making. So yeah, it's super crucial for businesses to be successful. Otherwise, you're going to make decisions. You're just going to be doing them blindly, right?
Yeah, the sentiment that I've heard a lot with companies is this idea of predictable revenue.
Mm-hmm.
And I think the idea would probably be both predictable revenue and predictable expenses, so that you can actually see what your bottom line is. But there's kind of the operational piece here, but you actually have to understand what is happening at the end of the day. And the faster you can understand what is happening, I think the faster you can make those changes. Mm-hmm. And I think with the three systems that we saw today, this is something you can actually implement. Harry, I think there's really substantial piece that comes from reporting, and it's something that if you really invest in it, it lets you chart a better path towards the next kind of phase of growth, whatever that may be.
Yeah, it's amazing how much better your decisions end up being on accurate data, isn't it? Like, even if you take it away from just finances, like, I don't know, if you put really good processes in place, whether it be in like customer success, and you understand your data, you understand your customers, what they actually want, and then you make decisions based on real live data, and then you suddenly sit back and go, good processes, and look how more effective we are. So it's not even just finances, it's across the board.
Yeah.
Yeah, and I would actually add, across the board piece, even from my own experience, I've been in situations where I know just having done certain things over and over again. I know that there's like a, let's call it a best practice of something that you would want to do, but I actually don't have the ability to report on whether an intended change, this is from, marketing, content perspective, whether an intended change actually changes the behavior of your audience, because I just don't have that layer of reporting. And then suddenly you're sort of, you get stopped in your tracks. Like, it doesn't matter how much knowledge you have or how many ideas you have, you can't actually get a sense of, is what I'm doing having an impact?
Yeah.
Okay, so I haven't seen any other questions roll through. So if folks still are wondering anything about ApprovalMax, Joiin, method, anything that we discussed in this webinar, you still have a couple of minutes to pop that into the Q&A box. Alternatively, we are going to wrap up in a few minutes. I just want to make sure that we tackle everything here that was listed. So Sydney was wondering about that CFO level reporting.
Yeah,
It's great for, yeah, go ahead.
You speak to that. So QuickBooks and Xero are great for, pulling your financial statements, your AP aging, your AR aging. That's fine. They're not there for consolidations. They're not there for budgeting and forecasting. Or doing more sophisticated reporting. Again, trying to get everything out of that one system is really more of a monolithic way of thinking about things. And so, like I said, it's 2025. You should have another reporting tool that you use. Like I said, they're not thousands of dollars a month, right? So it's kind of a no-brainer, and they're going to give you better access and quick access to the information that you need for your different user groups. I think just going back to that comment, that question that was raised too, I think part of the issue is that if reporting is too complicated to pull, we're also not pulling all the types of reports that need to get pulled for different users within the organization. And so what tends to happen is that various leaders and managers don't get the information that they need regularly enough, and they're really the ones that are making more of impactful decisions on a day-to-day basis. And so if we can do really good reporting, really good budgeting and forecasting for them for their area of responsibility, then they can help drive the day-to-day decisions to the organization better. But yeah, QuickBooks is, you have to have really good clean bookkeeping. That's kind of a no-brainer because any of your reporting is worthless without that. But the QuickBooks and Xero are great for keeping that real-time bookkeeping under wrap and some basic reporting, your general financial statements. But anything more complicated, then you're looking at a separate tool.
Yeah, absolutely. And I think I see actually Savannah piping in here in the chat. I appreciate the question. Would I be looking at using ApprovalMax to achieve my complex workflow process?
It can handle a number of different workflows. So it can handle getting the documents into ApprovalMax and then into QuickBooks or Xero. So it can do that receipt capture. So you can do your whole AP process starting there. The approval piece. There's actually a really cool feature in ApprovalMax too, where you can you can do a budget check for you. So if you have a budget for a specific project, it'll actually link into there's a basic budgeting feature in QuickBooks. It's just on the P&L side, but you can put in so what do we generally do is just upload our budgets from our other system into QuickBooks for this very purpose. It'll basically look at the budget that's set for that project or class or whatever it is in QuickBooks and compare that to how those transactions have been going through ApprovalMax to see if that next transaction might put you over budget or under budget, which is pretty cool. So it'll handle a bit of a budget check, the documentation, the workflows, the approval workflows, and like I said, that all gets pushed into QuickBooks. So you've got your AP and expenses in the books nice and smoothly. No worries.
Amazing. Thank you. But I'm not sure if this is the same Savannah that asked the initial question. If you are, the question around utility trailer sales and having, need to do purchase orders, different delivery steps, and kind of titling, handling, quality checkoffs. We actually shared this question with our head of sales to get a sense of like where method would plug into this. And he said that when it comes to actually delivering things and servicing things, all of these things can be built out. So some of them would be out of the box in method in terms of work orders and here you go. But if you have specific requirements, maybe it's based on different product lines, or maybe it's based on different service areas, I'm not sure. All of that can be customized, and that's one of the big pieces why people come to method is yes, they're doing sales and they're interfacing with customers on the sales side, but then there's actually the delivery side. And the delivery side is sometimes very complex, and you want your technicians to follow a specific process, and you want other steps to kick off afterwards. And so, just I think it was 3 weeks ago, I was talking to a customer who would be doing 3 different paper copies for everything. It's like 1 copy to the office, 1 copy to the technician, 1 copy as like a backup, and then consolidating all of them. And we're talking here about like purchase orders, updates to what the customer wants, so on and so forth. And all of that was consolidated within this workflow within Method. So you could definitely do that. And then when it comes to the purchase side, or actually to the AP side, you can 100% implement that with ApprovalMax. Cool. So I'm not seeing any other questions coming in. Harry, anything that we wanted to tackle here still? I think we already talked about monthly reports and everything.
I think we've nailed all those questions, haven't we? Really, with kind of what we've been through.
Yeah. Yeah. Okay. Amazing. So I'm gonna start wrapping that. Really appreciate everybody who joined. Once again, Harry, Helina, thank you so much for joining the webinar, helping to answer these questions, and providing your experience and insight. We will be sending out the recording for anybody who had to jump, and we'll be following up with any questions that were unanswered. So expect to hear from us if we didn't get to your questions specifically. Yeah, anything to add, Harry, Helina?
No, thank you very much, and lovely to meet both of you as well.
Yeah, likewise, and thank you for having me too, and it's been great. Thank you to everyone who joined us today. Hopefully this was helpful and you got some good tidbits.
Take care, everyone.